Probability trading strategy, you're full of crap.
Things aren't working, then that's a quick trip to the poorhouse.
To learn how to drive the beater before you can drive the Lamborghini.
Now you're playing with the house's money.
All right, so now you're playing with the house's money. Good morning, Mike.
Yeah, good morning, Dennis. Yeah, it does feel good to play with the house's money.
It's certainly
after the year that we've had too. Like there's plenty of it.
Oh, I tell you, and that's certainly the case because, like last week was a little bit scary for all of us, I think, in that uh, basically getting hit really hard on Wednesday and Thursday, significant sell off, but then that really great rebound on Friday. And so it was so funny, as I was sharing with you earlier, I went from being 75% invested and then by the end of Thursday, I was back down to 23% invested because basically my system worked for me very well, took me out, went for both profits and small losses. And then I was able to basically start jumping back in on Friday. And today got into some stocks I've been waiting to get into for a long time. PLTR is one of them. And so that jumped off the chart this morning, or actually came back to where I wanted to buy it on the pullback. And so we jumped onto that very succinctly, along with 3 other stocks this morning. So, hey guys, we basically are you tired of inconsistent trading results and false promises of those get rich strategies? Well, what if there's a key to your success for 2025? That's what we're going to be focusing today, 2025. And then it's not about trading harder, but it's about trading smarter. So you want to stay with us today for a lot of reasons. One, we're going to basically hit 10 proven steps that you can use to kickstart your trading going into 2025. If we don't finish all 5 steps, or all 10 steps, we will finish like half of them, and then half of them will finish up next Friday. These steps are so important that I wish somebody would tap me on the shoulder when I got started trading, Mike, and said, hey, Dennis, here's some 5 steps. If you follow these 5 steps, you basically are going to avoid a lot of the landmines that I managed to step on my own. So, hey, these are secrets seasoned traders swear by, and will bust the common myths, holding traders back. And by the end, you'll have a clear roadmap to build confidence and consistency in the market. Good morning. As I said earlier, I am Dennis Wilborn, and joining me is Michael Lamoth. And we aren't here just to talk trading. We're here to help you achieve freedom through trading. So, Mike, you're the founder of Mara Wealth. How long have you been trading? And I know you wrote a wonderful book. So why don't you promote yourself a little bit?
Thanks, Dennis. Yeah, trading for 25 years. First 10 were an absolute nightmare. So if you want to say, well, how long have you been trading successfully? Probably about 14 total. And the first 10 were horrible because I was trying to do it all on my own. Didn't really have much of an idea of needing a system or a process or anything. I just thought you throw money into the market and you wait time and you invest it so it grows and that's it. But I found out that that's basically the equivalent of taking like a whole bunch of seed, tossing it into a field in a pile, and then expecting something to grow there. It just doesn't work that way.
Yeah, right on.
So eventually I found William O'Neill and How to Make Money in Stocks, the whole Investors Business Daily and Can Slim methods. And after studying that for a year, that's when I started to have success. And this is when I was trading, with a full-time job, separate full-time job. I was in healthcare at the time. And slowly over the years, I was able to build up enough capital to where I was able to tell the day job goodbye, and now here we are.
Right on. And so,
you'd mentioned the book too. I've got the 2 books sitting behind me. There's also a third that talks about
How about that one?
how to write a.
Does
Oh
that
yeah,
work?
that one there, the trading mind wheel, that teaches people the 8 essential skills needed for trading, and it's well, when I was learning how to do all this stuff, I read O'Neill, I read Van Tharp, I read Darvis, Livermore, Minervini, and a variety of others, and they were all fantastic. But
Yeah.
what I learned, I was gathering bits and pieces from each, and I started to learn. Oh well, you actually need to set up your trading as a business, and Tharp talks a little bit about that in his book Super Trader. Then I started to learn that, oh, well, you also need to track your trades in a journal and do a post analysis. Doing back testing is important, along with analysis and risk management, trade management, position sizing, all that. And so that's why I decided to write the trading mind wheel, because I was learning bits and pieces all over the place. And I thought, wouldn't it be great to have all that in one book? So that way, if you're trying to decide, do I really want to get into trading, uh, like how we're trading right now? Here's what I'm getting myself into. So that
Yeah,
way I
right
can
on.
say, oh, you know what? This trading thing, maybe it's not for me. Or maybe I'm saying, hey, you know what? This doesn't seem too bad. Let me go further down the rabbit hole.
So, yeah, cool. And so, yeah, no, after reading your book, I love your book. It's fantastic. And you mentioned journaling. And I just suggest, guys, if you're looking for a great journal, look for my journal over. This is the Autopilot Trading Journal. You can get that over on the Amazon. And it'd make a great, if you're looking for a gift for another trader, that journal is a great gift. And so now, Mike, I love your background. And I've been around a little bit, also the creator of Autopilot Trading. And it's a system that with an average return of 37% per year, going back to 2012. And
That's fantastic.
and I also, have just a book where I cover my system where people can actually grab this book. I keep it simple, I keep it clear, and it's your trade your way to freedom. And trade your way to freedom, retire sooner with more money and less fear. And I started trading much as you did when I was still gainfully employed as an engineer working in the wireless industry. And I was working 7 to 12, 7 to correction, 10 to 11 hours, 10 to 12 hours per day, 6 to 7 days per week. And
Mhm,
I was going, okay, I want to be trading, but at the same time, I have to be working. And so I took that and said, okay, how can I streamline that, make a clear and simple approach to trading success for
mhm.
busy professionals? And that's what we've done with the autopilot trading. So both Mike and I have made well, Mike probably hasn't made as many mistakes as I have, but no, no, Mike and I both have made mistakes. And what we do is basically pile all those up into lessons learned, and we share those with people who join us for the podcast, Trading Truth podcast, because we want to debunk the myths that are in the market. Because there's a lot of things out there that. Let me ask you a quick question, Mike.
Yeah.
Which Okay. Which issue, when you were starting to learn how to trade, was the thing that hung you up the most? Was it the what you didn't know or what you thought you knew about trading?
I would actually say that it was an unwillingness to trust anybody.
Oh, okay.
And because when I was first starting out, I got burned pretty badly by the so-called professionals, and I had trusted them out when I first started out. I went to my local bank because I thought that that's where you go to buy stocks,
Sure.
and they told me, well, you don't want to buy stocks. That's way too risky. What you want is this. And they handed me this big pile of books that were prospectuses for all of the mutual funds that they had to offer. And they told me that, you put your money in this and we'll invest it for you. It's lots of diversification. And so I said, all right, that makes sense. I don't really know what
Yeah,
I'm doing yet, so here's my money. You guys go and do it. And at first, they were doing pretty well. It was maybe about the second quarter of '99. So midst of the dot-com bubble,
sure.
and they were up about 10%. And I thought, well, I'm pretty good decision handing my money over to them. And then by 2002, when I was ready to take the money out, I had just graduated from college. I went and I looked at my return, and I found out that I was down 20% since handing them
Whoa.
my money in '99. And I'm like, well, guys, you had 3 years to make something happen here, not just take my money and charge me your fees for the privilege.
Yeah,
So
yeah.
that after that, I it took me a long time to really trust anybody.
Okay. So, yeah, yeah, I get that. I mean, I understand that aspect, and again, that was the journey that you were on. From mine, I was basically coming back around the corner of I fell in love with the concept of charting and all that kind of stuff. But I think for me, it wasn't so much what I didn't know, but it was my ego in thinking I knew more than I really did. And also
Interesting.
being selective, learning to be selective about what I learned. Because I was trying to
Okay.
jam cram everything in. Oh, I got to know this indicator. I got to know that. I got to. And my charts look like spaghetti. Because I've been a chartist forever, but my charts look like spaghetti. I had like 15 different moving averages and multiple momentum indicators. Not 15. That's a slight exaggeration. It was probably only 10, but I, it was confusing, but I thought I was doing what I needed to do to be successful in trading. And what I found out was I could have actually known less and did less and done better with my trading. Does that make sense?
Yeah,
Eh,
I think that when we try to look at too many things all at the same time, it makes it too confusing.
Yeah. Well, don't I find that is a fairly common characteristic for people just getting started. Just starting. I
Oh
think
yeah,
Mark Minervini made a comment in one of his books. He said that basically he felt that the entry level into trading is too low because it's too easy to start trading, and unfortunately, because it's too easy to start, that makes it really easy to lose.
mm.
Because we don't have habits, we don't have winning habits established. Because much like
Oh
you,
sure.
it took me, I've been trading for gosh, over 30 years now. And for the last gosh, the first 10 years, similar to yours, is, it was a mess. I mean, I blew up two accounts, six-figure accounts, which, try to explain that to one's wife.
Mm.
She was not happy with me at all. But I had the, I think I had to learn how to lose the right way so I could learn how to win the right way. And
Interesting.
losing the right,
Tell us more about that. Well, what's losing the right way?
well, losing the right way is getting past the concept that every trade is going to be a winner,
Okay.
and also utilizing stop losses appropriately and properly and
Hmm.
all the time, because that's what saves us. I mean, that's the insurance policy. And then coming to the recognition recognize I recognized that if you're trading a system that has, let's say, a 65% win loss ratio, that means that 35% of the time you're going to lose. So part of a successful system is both winning and losing. However, if one has a issue with in a belief system that says losing is bad, terrible, and I can't be a loser, I think that sets them up to be a deer in the headlights and lose more than they should because they're reluctant to utilize stop losses, or they may put a stop loss in, but then as their prices approach it, they move the stop loss. Well, let's move it down. Let's move it down. And they keep ratcheting it down. Um, and so, I don't wish this on anybody, but some of the biggest lessons I've learned in trading were the ones that hurt the most.
Mhm.
Like seeing a position size go from, you know, well up, 20, 30% up, going all the way, letting it go run all the way until they delisted the stock and it was totally gone. So
Oh man.
I mean, that's kind of the stubbornness that I used to have when I was trading. Do I do that now? Heavens no. I mean, I don't do that at all. So, hey guys, a quick favor. If you're getting value from this podcast, one, hit the button, the subscribe button, leave a comment with what's the biggest trading myth that you're challenged with, and remember to share this episode of Trading Truths with a trader that you know. And if you're looking for some clarity going into 2025, I hope you make stopping in and seeing Mike and I every Monday at 12 noon Eastern time part of your trading routine, because we're going to help debunk the myths and also help you avoid the landmines that are in trading. So, hey, let's unpack what we came to talk about today, Mike. These common myths and false beliefs that derail traders. And we're going to show you how to replace those with some truths that, and lead to your success. So the first one is learn the basics. And the myth that goes along this: trading is easy and requires no effort. And it refers kind of back to what I said about Mark Minervini and what, that he said in his book. So what's your thoughts on that? Learn the basics and that myth.
Yeah, I think that you have to learn. You have to learn what the basics are first. I
That's
think that
good.
there's. I think that there. Well, for me, there was a huge gap between what I thought that the basics were and what the basics actually ended up being. That's why I wrote the Trading Mind Wheel. I thought that the basics were put money in, wait X amount of time, more money pops out the other side, and that's as basic as it could get. And so later on, I found out, well, gee, there's a lot more to it than that. There's
Yeah.
there's mindset, and well, what's mindset? Mindset is our beliefs and our belief systems,
Yeah.
and so well, we have to figure out what kind of beliefs do we have. It's almost like our software. If we're running old software, then it might be time for an upgrade. Well, we
Mm,
need to,
right on.
and we need to have a beliefs and belief systems that are leading us to the outcomes and goals that we want in our trading.
Yeah. And you make a really great comment there that, it's like, having an application or software that we run on our computer, and you need an upgrade occasionally to make sure that it's running at the best possible way that it can be. And it's the same with trading. It's one of those situations. It's much like, I hate to use this analogy. Well, it's much like golf. You know, one can become a great, great golfer, uh, but they have to practice at it all the time because success is fleeting, as they would say, and it's the same way with trading. It requires numerous, almost continuous kind of resets, almost on a daily basis or a weekly basis. That's why we do our reviews. That's why we do our routines, so that if something gets out of sync, that we kind of like, okay, something's not right.
Well,
And
here's
so,
the
but
thing that gets most out of sync for me. The thing that would get most out of sync for me is when I would be doing well for a period, and then I think, "Oh, I've got this,"
yeah, yeah,
and then I
yeah,
start thinking that it's me, and then I'm very quickly reminded that no, it's not me. Well, what it is having a system, having rules that you're constantly following.
Oh, exactly, exactly. And like you said, a lot of times traders will suffer from. I know I've suffered from this. Is they have a cap on the amount of money for their portfolio. Let's say it's 5,000, 10,000, 20, $100,000,
Mm,
and when they approach that level, they will do something to self sabotage their trading so that it drops to back down below it. And so it's what goes along with that adage of, a person earns their size and through the learning
mm,
process, which so they can go above that. And then once you get above it, then you continue to start building. But as soon as ego kicks in and goes, "Hey, I got this. This is it's easy peasy. I am a winner." Blah blah blah, and they start believing their own headlines. Uh,
mm.
they get cocky and they tend to have a failure, operator error, a failure in applying their rules. And for whatever it is, maybe it's, well, today I'm not going to use my stop losses. Maybe today, I know this stock is going to turn around, so I'm going to try to buy it right off the bottom rather than waiting for the confirmation thing. So, the in this particular area, trading requires little or no effort. Is that this is where I see a lot of folks, again, two camps. They think they know more than they know. Okay, and so they're blissfully ignorant about how the market works. Or two, they are frozen going, if I just learn more, I'll be more
Mm.
successful, rather
Well, what
than
kind of things do you think that they know, or have you seen people think that they know? Right, like the person that thinks that, oh, I know where this trade is going to go, and yeah, like, well, what types of things do they typically know or
well,
think that
that
they know?
well, I mean, that's part of it, but also that's part of it. But also, I think that I know I came into trading having a preconceived idea of what trading should be like, and I
Okay.
didn't I didn't take the time initially to learn what trading was really like. I didn't read Bill O'Neill's book right out of the gate. Um,
Mm,
uh, I basically actually found a one of these the one of the Lamborghini guys, that we you make jokes about.
mm,
Kind of say, oh, because I was looking for the fastest and quickest way that I could make it. And the fact of the matter is that it's kind of like, it's like the Bible story of the person who builds their house on the sand and the
mm,
person who builds their house on the rock, right? And so by 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 knowing less than what I thought I did, I was building my trading house on the sand. And when the hard times, when the dot-com bubble of 2000 happened, and that type of thing, it came and it just washed everything away,
mm,
because I didn't I was my structure, my system was not strong enough to withstand, and it wasn't built to withstand the storms. Now I have a system that's gone through the storms and is built to do that. So one of the things, a couple of things that people can be doing is, I hope, did I answer your question on that?
yeah, I think so. I actually have a follow-up, because in the beginning, you had mentioned that you've been compounding for or average annual return of 37% going back how many years?
2012.
2012. So you've survived several sharp pullbacks,
Yeah.
corrections, bear markets,
Yep.
and that's great to think about.
Yeah. I mean, because, yeah, going back, and I've gone through, I won't say successfully, but I've gone through the dot-com bubble and then the
Mhm,
housing debacle and back in 2007, 2008.
mhm,
And you know, traded traded the dot-com bubble terribly. The '07, '08 bear market a
mhm.
little bit better, and then when we got into the COVID, COVID bear market, yeah, that was a piece of cake. That was, once that was over, that was like, okay, back up the truck, let's go.
Yeah, battle tested, ready to go.
Yeah, I mean, because like I said, it took me probably 10 years plus to get to the place where I would admit that I needed stop losses.
Mhm.
And then it probably took me another 3 or 4 years to do my back testing and all that kind of stuff to prove, yeah, you need your stop loss. That's gotta
Well,
be
what do
in
you think
place.
the big hang up is with stop losses? Like, it seems fairly common that people, like, "I don't need no stinking stop loss."
Uh, great question. Hey, if anybody who's on the crowd tonight, you know, type in the comment, what is the hang up with stop losses? Because we want to hear from you. What is the hang up? If you're um, the a lot of people say, I think part of it is gets back to that idea of I don't want to be a loser. And so if I
Mhm,
have a stop loss, that means I've lost. They don't have an appreciation for one, the probability of winning and the probability of losing. And they don't have, and so they mistrust their system
mhm.
and they mistrust their capability of executing their system. So I think that that's part of the deal with the stop losses.
Do you
And
think that there's something to the boogeyman, the broker or the market maker boogeyman in the background, seeing that, oh, you placed the stop loss and now they're stop hunting and trying to get your shares? Do you think that there's anything to that?
I think there was at one time. I don't think there is that anymore, or as much. The One of the things I coach people up on, of course, is don't put your stop losses at even numbers or zeros or fives,
Mhm,
because just knowing the psychology of the people who are doing it, that's the most logical place to put your stop. Okay, you're going,
mhm,
okay, that's where I'm going to put it. And guess what? you know, Market makers are really great at understanding human psychology and trader psychology. And if they know that, oh, well, and it makes sense. You look at if you have a swing low and swing low, going a nickel or a dime below that swing low, the market makers know that, oh, well, a lot of people do that. So guess what? So they're not looking at your order. They just know that that's where the psychology says to put it. So learn
mhm,
to outthink or learn to think like a market maker to say, oh, well, if I was a market maker, where would I basically want to drive prices to take out the stops and then go slightly below that. Or like I've been doing here lately, utilizing 1.2 times the percent ATR to start establishing my stops. And that
mhm,
keeps me out of the daily range and gives me a little bit of downside. Some people use a factor more than that, but
mhm.
so anyway, hey, let's basically here's two of the points you can do solutions for the learn the basics is one, start with beginner friendly resources. And Mike and I have already pointed out two of them, both Mike's book, Trading Mind Wheel, and my book on trading your way to freedom. And then some foundational courses on trading are trading essential. I know, Mike, you have a foundational course that you are. I think you're having a Christmas special on it, right?
Yeah, so I'm not sure I would call it like a basics, but for those of you that have already been in the market and are trying to figure out, well, how can I, how do I get this to gel? I just made a course for how to use multi time frame analysis to supercharge your trading.
Okay.
And well, this course, this is what's allowed me to generate 147% in the last quarter in my aggressive account.
Right on.
And the when you're trading aggressively, one of the most important things is your trade selection. Some people say that trade selection doesn't matter as much as your position sizing. I think that both matter, but if you're going to trade aggressively, you need to be in the right kind of trades that have the capability to have big moves. So
Okay.
how do you do that? One of the ways that's helped me do that is through multi-time frame analysis, making sure that a trade not only works on a weekly time frame or a monthly time frame, but it also works on a daily time frame, also works on a 30-minute time frame. Because, well, what I've observed is that it draws more eyeballs to that same trade, and it's increasing your odds of the trade being successful, and it also increases the chances of that trade having a big move. So that's this course is how I've done that.
Okay. And we'll put a link for in the description on how you can get hold of Mike's course. It's a great one, and it sounds like that course is foundational in that it allows you to basically cover um, a lot of different bases. And then I have a really basic course available. I put the link in the description over on YouTube. And what it is called the precision entry point routine. And
Okay.
I go through specifically a routine that you can repeat over and over and over again. It's simplified down to just one setup. That happens quite often in the markets. And so I'll put that link over there. And it's a great place, again, back to what we were saying earlier about knowing knowing more or knowing less than we should. A lot of people think, well, I've got to have like 17 or 18, or I need to be watching a different entry patterns. But in reality, all the best traders, I know Mark Minervini, I know Mark Douglas, I know, Mike Lamoth and Dennis Wilborn. We have like only like one or two, maybe three setups that we utilize on a over and over and over and over again. Why? Because they work and they save us a lot of time in trying to, you know, look for trades because the setup is either there or it's not. And if it's not, go have breakfast.
Yeah, right.
So,
Yeah, go have breakfast. Yeah, for us, it's almost lunchtime here. But yeah, it would be akin to, like, okay, you're making a sandwich, right? Or you're having a hot dog, and you decide, okay, well, I want to put all the condiments on this hot dog, so I'm gonna put ketchup and mustard and mayonnaise, and think about, well, whatever else you want to throw on it. It's gonna be disgusting, right? Just pick one, and it's gonna taste a lot better.
well,
Same thing
right
with
on.
trading.
So, and the last point on this one is focus on understanding key concepts like market trends, chart patterns, and trading terminology before executing trades. So part of the thing is to, uh, you know, find a great book, read it that gets you started, and then from there, you'll be smart enough to then start asking intelligent questions about how to start trading
Mhm.
because you're not a blank sheet of paper. So, identify your trading styles because we all know a that one size fits all in trading strategies, right, Mike?
Yeah, no, no, not at all. And you know what? Before people go and identify their trading style, they should think of themselves like a blank sheet of paper,
Mm,
and then start to read a few different books. Some
right on.
people come to me and say, like, "Oh, like, I'm trying to figure out, like, what my trade." Well, like, you don't need to do this from scratch. Pick up
Yeah.
Market Wizards, right? Like Jack Schwager interviewed the best traders on the planet, and there's all different kinds of styles in there. Find a style that you like and then go dive deeper into that kind of style.
Yeah, exactly. Yeah. And so, and when you say dive deeper into that style, I mean, what exactly do you mean? Because in my, I may be wrong, but what I find is, especially working with a lot of engineers who want to become traders,
Hmm.
they immediately hit the ground running thinking, "I'm gonna reinvent the bicycle and reinvent the wheel," not the
Mm.
bicycle, the wheel,
Right,
because,
right.
1, I'm brilliant, they're on an ivory they think of themselves up on an ivory tower, and, "Guys, don't worry about me picking on engineers because I are one," but, I mean, it's just, kind of normal for their personality is they wanna take something and make it better, right? And
Sure.
they missed the point is trading's been around for a long, long time. And you go back and watch something that Jesse Livermore or Darvish, you mentioned him, and almost on every one of them, they had a very simple system or simple strategy tactic that they would watch for over and over and over again. And and so go back and look at what they were doing. You don't need to reinvent the wheel because, uh, trust me, you're probably not gonna make it any better. Now, are there refinements in how well you execute? Sure. But what I find is that it all comes down, especially if you're a swing trader, it comes down to, 3 basic things. One is support resistance, trend, uh, momentum shifts, and reversal patterns.
Hmm.
That's it. I mean, that's pretty straightforward and simple, don't you think?
Well, here's what I think about like the style thing. I think that like if you go and you read, let's say that you study Warren Buffett, Nick Darvis, and William O'Neill, and you're like, oh well, Buffett's trying to buy low and like find these companies that you could be in for years and years and years, and
Right.
maybe you're like, oh well, I want to make money a little bit quicker than that. So, okay, great. Then you're able to table that kind of a strategy. Then you start to hear about William O'Neill, and you go through how to make money in stocks, and you're like, oh wow,
Sure.
so this guy's looking for stocks that can run 1,000% in maybe a year or two. That sounds really good. And then you're starting to think, but oh well, one of the things that he's doing too is having a lot of concentration in a handful of names and being able to write them up. And then, well, he gives a way to figure out which ones those might be, but I'm not quite confident in my ability to do that. Um,
Right.
then you read somebody else, right? And then that's how you start to figure out, well, I kind of like what O'Neill's talking about over here, and I kind of like what Dennis is talking about over here, and I like what Mike is saying, and then that's how you start to come up with your own strategy by
Okay.
learning a little bit over here, a little bit over there, and it's that's how you do it. That's how I've done it, and I think that that's well. That you tell me, is that kind of how you went about doing it, or you're a
No,
bit different?
no, that you're absolutely right on that. Here's what I did was basically I looked at several different, strategies, if you will. Um, I knew I wanted to be a swing trader, so I looked at several different swing trading processes, if you want. Um,
Okay.
um, the IBD method was one of them, and what I did was I picked what I thought was the best parts of each one of those, come and left the complexity out. In other words, I didn't include that when I rolled it all back over into my system.
Mhm.
And so I was looking for, picking the low hanging, well, yeah, low hanging fruit, I guess you would call it. But what I thought was the strongest part of their system, I took that. And I
Mhm.
took the strongest part, of, another system and another system. And those are like 3 or 4. I know that, IBD was one of them. Um, but then and it's been so long, Mike, I can't remember exactly who the other ones were. Uh, but part of it was also my mentor. He was a big pullback trader, Dave Johnson, used to be uh, employed by Invest Tools. I learned a lot from him, but then also reading the McGee Edwards. Part of the way I developed it also is I did all the coursework to get my CMT, uh,
Mhm.
and so it was in that I hammered out the rest of when I say, pick and choose. And I love the concept of pullbacks. It made sense. I could see it. I could see the patterns, and then we went from there. And so, yeah, you're absolutely right. I, I, again, you know, I shaped it. I don't know if I'd call it shaping it to my personality, but I certainly shaped it to my eye, and I shaped it
Mm.
to what I was trying to do, which was be clear and simple. A clear and simple approach was what I was looking for. That was easy to do if one would apply themselves to the learning aspect of it. And then I wanted to make it where people could use the system in off market hours, so they basically could have lifestyle freedom. Because
Mhm.
to me, lifestyle freedom isn't parked in front of your computer screen all day long while the market's open, trying
Mhm.
to, biting my nails about, what's, what, oh no, that position, it's gone against me a nickel. What am I going to do now? You know, and, at least, that's where I was. And so I really love it now. And that I do most of my trading on, we get it set up so that people can put in their orders on Saturday,
Mhm.
and they're fire and forget type of orders. And then I focus on my routine coming in at the last hour of the day. And other than that, I'm doing other things. I'm writing. I'm researching. I'm doing that kind of stuff.
Doing podcasts.
And doing podcasts with Mike. Yeah.
Yeah.
So, hey, on this one, so let's see, frustrations from using strategies that don't align with your risk tolerance, capacity, or lifestyle. And then some of the other pain points is emotional decision making caused by trying to copy other trading styles before you make it your own. And so, the question I have, Van Thorpe used to have a uh, assessment that you could take. Do you know if that's still? I know he passed away a few years ago, but is that um, uh, trader assessment still available? Do you
Ah,
know?
that's a good question. I don't know. Let's look it up.
And so,
Vanthorpe
yeah,
is
and
oh
because
yes,
I
at
used
vanthorpe.com.
okay,
Uh,
that was
yeah.
an excellent uh, profile tool to help you understand. Could help traders understand where they were as a trader, both strengths and weaknesses
Mhm.
that they could be working on. So I don't know if we can find that link, I'll be glad to put it in the description, because I encourage traders. Anybody out there taking that the people who are joining on? Has anybody else taken that Van Thorpe trader survey diagnostic? It's a diagnostic actually. Go ahead. It's not going
Yeah,
to
I mean,
hurt you. It's not going to hurt you to type a Y or an N in the comments, guys and gals.
yeah, I'm on vanthorpe.com right now. I don't see that. It used to just pop right up as the
Yeah.
first
Yeah.
thing, but it's not there right now. There's
Okay.
he has the blog, YouTube. Oh, there maybe this is it. Tharp Trader Test.
I bet you that's it. Trader test.
It's a little bit different than the original one that I took, but yeah, here I'll put this in the.
Okay, guys, that's two things we've given away today, Mike.
StarTraderTest.com.
We must be in the gift giving mood because we're approaching Christmas very rapidly. Um, excellent. So yeah, this just take a look at that, and if it's similar to what it was in the past, it really is an eye opener. At least it was for me. So the other thing you can do is just experiment. Yeah, one of the things when you're first trading, I encourage people in reality when they start learning how to trade a little bit is don't trade with real money for the first 6 months to a year. And unfortunately, people are oftentimes in a rush. Their money is burning a hole in their pocket, and
Mhm.
to get it out there and to do real trading. Where if think about it, what other profession is there out there that they throw you immediately into into the lion's den, if you will? Because I know that I wound up flying in attack jets in the Navy and all that kind of stuff. But the first airplane that I started my learning how to fly on was not the jet that I wound up flying later on in life, but it was an old crusty Navy trainer called the T-28, and had an old 1400 horsepower radial engine that would you'd turn it over and go blah, 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 and
Mhm.
smoke would blow back past your head. Because guess what? When you're first starting out, the military is not going to trust you with a multi-million-dollar aircraft, because one, at that particular point in time, I know this sounds a little bit probably harsh and maybe calloused, but at that particular time, if you happen to crash because you haven't gone through the training, as all the way through to fly the ultimate jet, if you happen to crash, one, you're not as valuable as you will be in the future as you get better, and neither's the airplane, right? And so,
Mhm.
whoa, that was harsh. My
Yeah,
wife's.
gee, yeah. Well, flashbacks of It's a Wonderful Life, more valuable dead than alive.
Yeah. So, anyway, well, what about setting goals? Trading success happens without any planning whatsoever.
Yeah, I think that kind of goes back to what you were saying a moment ago with needing not just a plan, but understanding which way you're like how to execute and why and styles and all that stuff. If you're trading without any kind of a plan at all,
Yeah.
um, then I think that you're going to get into trouble. I could see some people thinking that, oh well, or I think that this myth comes from the idea of, oh well, you know what, Dennis, if I bought Amazon and I just stuck it in a drawer and I opened up that drawer 10 years later, look at all the money I'd have right now.
Yeah. Yeah. Well, I mean, some people are trying to do that right now with Bitcoin. They,
They
they
might
don't
be trying
get.
to do that with Bitcoin, or they might be trying to do that with who knows, name the stock,
Yeah,
right?
exactly,
Reddit.
exactly. Yeah, because it's like people tend to have that recency bias. They've seen a recent run really up high, and they're so FOMO'd out that they're afraid they're going to miss out on the next move, that they buy at an inappropriate time. They buy
Hmm.
at the most recent high. Now I know that Anil would always talk about, well, buy high and sell when it goes higher. Uh,
Hmm.
at the same time, there's part of, and that's even a myth in itself, because a lot of times people don't realize, well, I bought the breakout, but then it reversed on me. Well, they don't realize that 65 to 75% of all breakouts will have a pullback towards the breakout area. And so when I see a breakout, I go, okay, cool. But I know the odds are in my favor, 65 to 75%, that it's going to
Hmm.
pull back toward, not all the way to the breakout point, but pull back towards it and set me up another nice pattern that I can jump on and run. Yeah, so The again, I think it all rolls back to learning the basics up front, because the basics up front are going to basically help coach somebody into understanding the importance about setting clear goals. I know in one of our first discussions, Mike, I think you were doing a presentation for the Bay Area Moneymakers for the IBD meetup group that I have. Is that you made a statement about three pieces of understanding or the ability to execute, and and the last point is just stuck in my mind and my memory. You said that one has to have not only the system, the process, and all that kind of stuff down, but the capacity to execute. You remember
Right,
saying
right.
that?
They have very good memory.
And, well, yeah, I take vitamins for that. No, no capacity, and I just kind of went, "Whoa, that is a really heavy statement." Having the capacity, and I think part of the deal is if our goals are not clear.
Yeah, very patriotic episode.
Yeah, one of my alerts just went off. I don't know which one it is.
Made in the USA.
Exactly. That was the Stars and Stripes forever. But if your goals are unclear, I think that you can't determine whether or not you have the capacity or not. And a
Mm,
person may fool themselves into, oh, I have this handled and all that kind of stuff, but they fail because they don't understand their system. They don't understand the strategy that they want to be trading. They don't understand the expectations, and they don't understand their own tactics. And
yeah.
so, does that make sense?
It does make sense. And if you don't have the capacity to execute, then the system's not going to help you.
Yeah.
Uh, it's the reason why I love Darvis so much. Oh, and I found out about him later on when I was first trying to study O'Neill. It made a lot of sense, and I'm trying to execute it, but I felt that there was something missing for me
Mm,
because I was struggling at first. Then when I started to learn about Darvis and saw that this can be done at night on weekends, and
yeah.
here's how this guy did it. And not only did he do it, but it was very similar to the kinds of things that O'Neill was doing with support and resistance. And here's structure, and here's the type of stock that can make a big move in a hurry. And so that's where I started to blend a little bit from A and B, and then learn from somebody else.
Yeah.
And then that's how I started to come up with my own thing.
Yeah, and for those who are unfamiliar with Nicholas Darvis, you get his book. I mean, they're giving it away. I mean, on Amazon, uh, where you can grab hold of that. And he was a
Yeah, I think
professional
it's around like
dancer who danced
$5.
all over the world and all that kind of stuff. And the takeaway from this though is the how hard he had to work to be able to trade,
Yeah.
because he would and it there was none of this instantaneous information like we have now, because that makes it really
Hmm.
simple. But what he would do was he would get telegrams from his broker, telling well, first let me start over again. He would send his broker a telegram at the beginning of the week after doing his research over the weekend, and said, here's the stocks I'm interested in. If they make this particular move, go ahead and buy, or something like that. And then the broker would then send him back what the stock had done for that day in another telegram. And that's how he planned and did his trades. And what was really interesting, it worked for him very successfully. He made a couple of $1 million in over a couple of year period of time. When he came back to the noise of New York City, where he could be close to the market and all that type of thing, he didn't trade as well. He struggled. Because he got out of his routine, and he no long there was too many distractions. And so the distractions impacted his capacity to execute. So amazing story though. Yeah, yeah. I think it should be one of the, you know, get it and read it. How, because it only
Yeah,
takes, it's like
required
an
reading.
hour and a half read,
Yeah,
Mike.
it's a very thin book, like maybe about 150 pages, so you could get through it in an afternoon.
Yeah. So amazing story. Yeah. If you've read, just lay a Y, a Y down or a yes down in the comments if you've read Darvis's book. It's really good. So develop or learn proven strategies. And this gets back to kind of what I was talking about before, Mike, is that, yeah, we need to be flexible enough to shape our strategies to reflect our own personality, but the basics of them are going to still be the proven strategies of what's worked in the past. Uh, and because there's this myth out there that complex strategies are better, and I totally disagree with that, because with complexity comes more variables. With more
Mhm.
variables comes more opportunities to mess it up. So what's your thoughts here on develop and learn proven strategies?
Uh, It's foundational.
Okay.
You need to learn a strategy that's proven. If you're going because if you're trying to build your own strategy from scratch, you don't know if it's proven or not.
Mm,
So why do that? Well, why not get a jump start and find something that's proven, and then if you need to tinker with it to make it your own, fine. You're working off of something that already works.
yeah, yeah, yeah. So yeah, I agree with that wholeheartedly. That um, I think there's the complexity issue, and also that thing that we talked about earlier about, trying to reinvent the wheel. Um,
Yeah, nobody needs to do that.
and it leads to, I think, the lack of both clarity and confidence in decision making. And one of the big things that I always work with our AutoPilot trading members, and they go through a 90-day training process, so that at the end of it, they've come out with some really great stuff. They'll know what all the charts look like for what we're looking at for setups, but they also have practiced. They've practiced over 400 trades. And why do you say 400 trades? Well, Mark Douglas and his wife basically came out when they wrote the book, The Disciplined Trader, and said that traders need to do 400 plus trades to really understand their system.
Mhm.
And so to get 400 trades, think about this. Maybe you do 4 per week, right? Well, that's
Right.
400 weeks. That equates to about 400 weeks. We've got 52 weeks in a year. That's don't tell me that's close to 8 years. No, it can't be. Let me do the math here. 400. Yeah, about 7 years to get that many trades, right?
Yeah,
Well,
that
we've cut it down to where by simulation, you can get those 400 trades and per and get them done within 90 days. And the reports I get back from our members is that, well, that makes all it has made all the difference in their ability to move forward and trade better, because they've gained confidence in the system and confidence in themselves, where they're no longer the deer in the headlight. So
mhm.
but that, yeah. So, proven. So, what do what kind of, like, are you honed down to just basically a couple of basic strategies? Like, I know you're trading some options, and that type of thing also. But are you using the same setup to trade options that you and then target shooting your entries, or are you using a different setup?
No, same setups.
Okay.
Same setups, and that's with the way that I trade. That's part of the beauty of it. It's the same. You'll find the same kind of setup on a weekly chart as you will on a daily chart, as you will on a 30-minute chart, and
Yep.
that's what one of the that's part of the strength I feel of multi-time frame analysis. Like
Yep.
we mentioned earlier, everybody's looking at the same thing, and you're spotting it across time frames, and then that's what's leading to this really strong breakout. And when you when you're able to just have like one or two patterns, that then it makes it easier to trade other asset classes that happen to have the same pattern show up. So I can
Yep.
trade Bitcoin when it's setting up in a VCP, volatility
Yep.
contraction pattern, and I could trade Reddit or Palantir or whatever when it's setting up in the same kind of pattern. It doesn't matter the name; it matters does it have this pattern or not.
Yeah, exactly. Exactly. Yeah. So yeah, I'm the same way. I'm basically because I believe here's a strong belief I have, and people can correct me if I'm wrong, but the proof's in the pudding for the last 12 years of hitting 37% per year
Mhm,
is that you have your strategy, or not your strategy,
mhm,
you have your system. Your system defines your rules, defines everything, how to get in. It defines your trading plan. How you're going to take profits, the whole 9 yards. And then on top of that, you have your strategy. Now, your
mhm,
strategy is, well, I'm going to trade stocks. I'm going to trade ETFs. I'm going to trade options. But it all falls back to my system. My system's
right.
got to be sound in order, so this is my foundation. My system's my foundation. Then I've got my strategies. And then on top of that, I have my tactics.
Mhm,
As an example, sometimes I buy directional options, right? So that's
okay.
just long calls, long puts. Or
Right.
I will do directional spreads that, either, bullish or bearish spreads, or I will, what else? Basically, sell premium, but I'm utilizing the system, the strategies are all the same, but then the tactics are what's different.
Yeah.
Um, does that
I
make
think if
it?
you when people the base that base system, when people try to run too many different systems, I think that's when they get into trouble because it
Yeah,
gets confusing.
yeah,
But you
and
could run different strategies off of the same system and you're okay because that foundation is the same.
exactly, exactly. And so that's what we worked at. And so, well, guys, we've gotten through four of our items that will make up the 10. I'm gonna pull this together into a nice little PDF. And so if you're interested in getting the total 10, shoot me an email, if you're looking for my email, here it is. Or I'll put also a link to it in the um, hold on a second. I'll put a link to it also in the description, and Mike will have that over on Spotify. Uh,
Yeah, very
let
good.
me see if I have put this in correctly. I think I have. There we go. Yeah, just let me know you're looking for these, and they'll be out here shortly. Um, And so, we've just shared the first part of the 10 essential trading secrets to start 2025 strongly for you. If you're a beginning trader or, no matter what, level of trader you're at, because I think rehearsal and refreshing yourself about what to be doing is important. So, I
Yes.
encourage everybody to, hey, join Mike and I every Monday, noon Eastern. for and bring questions, bring answers. Maybe we'll start implementing something, Mike, where we're going to have the stump Mike and Dennis. See if they can ask questions that will stump us, huh?
Sure, go for it.
And so anyway,
Bring it on.
hey, yeah. And so, hey, share the podcast with a trader Have a wonderful Christmas holiday. And we just pray our blessings on both you and your family. Mike, as I like to say, aloha, God bless. And anything you want to say to finish
Yeah,
us up
thank
for?
you all for being here. It's been a fantastic year. I look forward to a great 2025. And well, we'll see you next time.
Yep. Next Monday, guys. Aloha.
Bye, everybody.